Hi there, I'm Sarah Bowie with Bowie Financial. I'm here with Bill Munn. I just found out he has been in the insurance industry for over 40 years, which is amazing. And we were talking about long-term care. And the question I have for you is, have you ever known somebody who really just lived too long? And do you know how they paid for their care and their life after that? So Bill, does this happen to you? People talk to you about people who live too long? Is this a fear people have?
The number one fear for all retirees is longevity.
Okay.
They worry about outliving their money, and they worry about, and I'm not talking about not going on vacation or not going on trips. They worry about eating the cat food and all the horror stories that we hear about.
Nobody wants to eat cat food.
Nobody wants to
do
that, no. But the one thing that they don't either understand or don't realize is the cost of long-term care. Most people that I talk to seem to think that the government's going to look after them. They seem to think that there's no need to look at anything else, because if they get sick or if they get hurt and they get disabled, that the government's just going to step in and pay for everything. And
They're not?
And it becomes a huge surprise to them that the availability of care that's out there is very minimal. The government is stretched to the limit. They don't have the resources to do that. They tend to now pass things down to smaller governments, or like they go to provincial, to municipalities, or they go to private agencies to provide this care.
Okay.
And that costs money. And who pays for that? And it's not going to be the government. It's going to be you.
All right. So then I think we need to know, how does long-term care work?
So long-term care is very similar to the disability tax credit.
Okay.
So with the disability tax credit, you have to provide proof that you cannot look after yourself.
All right.
So there normally is 5 activities of daily living, what they talk about 5 activities of daily living. And if you think about what happened when you woke up this morning, well, the first thing you did was get out of bed, and that's number 1. Transferring position, being able to get out of this chair, going over there.
Okay.
Going to the bathroom.
Okay.
Washing yourself, dressing and eating. Those are your 5 activities of daily living. And if you cannot do 2 out of those 5, for whether it's a mental reason, whether you've had a stroke, or whether you've got dementia or Alzheimer's, or whether it's a physical reason, maybe you slipped and fell and have broken your hip or your leg.
Happens.
That
we live in Canada.
Exactly. And if you cannot do 2 out of those 5, you now have a claim.
Okay.
Okay. And normally with the government, you would obviously go to the hospital or go to the doctor, and they would assess that you need care. And they would go to, it used to be called the CCAC, and now it's called the LID. It's now called the LID. And they would assign someone to determine your level of care. And they would come in and they would look at your house situation, and they may say, well, you need help getting out of bed and getting into bed. You maybe need help getting dressed, help getting washed. Maybe someone helps to make your meals or to clean your house and things like that.
Okay.
And they would assign a personal support worker or a nurse to come in and see you.
Okay.
Now, what tends to happen with the government, because they're so stretched, so thin, is that they may assign a personal support worker twice a week to come see you.
Wow. So what do you do the other
Exactly.
5 days?
What if you need it every day?
Jeez.
What do you do?
Okay.
Then it's on your dime. You have to pay for it. And the problem is that when the government assign these agencies to come see you, you have to see them at their time. They like the government finances are stretched to the limit. So let's say the government says a personal support worker is going to come on a Monday to get you out of bed. They may show up at 6 o'clock in the morning.
No, I don't want to get up at 6 o'clock.
But that's the only time they have available.
Oh.
Right? And you have to adhere to them.
Wow. So
the best thing is to have your own personal support worker, to pay for it yourself, to come in when you want. But that costs money.
Right.
And invariably, if you don't look at long-term care insurance, that will come out of your investments.
Okay. All right. So we're disrupting a retirement plan or an estate plan in order to get basic care.
Exactly. People spend years accumulating a nest egg to enjoy their retirement, and that can be devastated if you need care.
Wow.
They say on average if someone needs 24-hour care, it can cost between $80,000 and $100,000 a year.
Wow.
And all that nest egg will be eliminated pretty quickly.
So when should people start looking at long-term care? Start talking to you or an advisor about long-term care? Is that after they've been diagnosed with something? When does this happen?
That's not a good time to talk about it. It's
No.
like buying fire insurance when your house is on fire.
Oh, that doesn't sound
No.
ideal.
So the best time to look at long-term care insurance is well before you plan for retirement.
Okay.
In fact, you can buy long-term care insurance from age 18. So the earlier you buy it, the better it is.
Okay.
The healthier you are, the easier it is to obtain. But most people, when they're 50 plus, especially 55 plus, when they're starting to plan for retirement, that's the best time to think about long-term care insurance.
Okay, so you're still healthy, you're 50, 55, you're making your retirement plan, and
That's
you're
right.
saying, well, I should add this in. This is
That's
another guarantee to my plan.
That's correct.
Right?
That's correct.
All right, interesting. So is the average person coming to you and having a really difficult time trying to get this insurance, or is the application fairly simple with these companies?
Good question. The average person doesn't know it exists, first of
Okay.
all. Long-term care insurance is not a widely sold product. Again, the attitude of most people is that the government's going to look after them, and they tend to think, I don't need this, but they don't realize. It becomes a big surprise to them whenever they realize there's how little the government offers. To get the insurance is relatively easy.
Okay.
There are no medical questions. There's a medical declaration that you have to agree to. But unless you're pretty bad health-wise, you can normally get it. Most people these days are type 2 diabetics and things like that.
Yeah.
Those people qualify for this plan.
Oh.
It's relatively affordable.
Yes.
The average cost of a long-term care plan for 55 plus is about $100 a month.
Okay.
It's a reimbursement plan in that you purchase a pot of money.
Okay.
So there's normally two plans available. There's a $50,000 plan and a $100,000 plan, and you draw down on these amounts until they're finished.
Okay.
And you're provided with levels of coverage. There's reimbursement for person support worker or nurse comes to visit you. There's a meal reimbursement, and what I mean by meal reimbursement, it's not Meals on Wheels. It's anything. You order pizza, skip the dishes, you keep the receipt, you send it into the insurance company, they pay you back.
Okay. No hospital food.
No hospital food. No. There's payments for adjustment to your house if you need to put a ramp in or one of those elevators to go up the stairs or things like that. There's payments for crutches, wheelchairs, various medical assistance. The list is quite extensive.
Okay.
And you draw down on this amount until you're done. This is a home care plan. This is designed primarily to keep you at home.
Okay.
The statistics have shown that most people live longer if they're at home,
Yes.
live in their own friendly environment, than if they go into a long-term care facility. The average lifespan in a long-term care facility is about 2 years.
Wow.
So this is designed primarily to keep you at home. And it's designed primarily as a bridge between home care and the facility, that if you end up having to go to a facility, that at least you've stayed at home for the longest time. The average wait time for a long-term care facility is about 5 years. So this is designed to pay for that gap.
Okay. So you're comfortable during that 5-year period that you're waiting here in Canada.
And some of the long-term care insurance plans out there have a long-term care facility rider that you can buy that actually ends up paying for that cost of that long-term care facility.
Okay.
It's an add-on. It's a rider. It costs more money, but if you want to do that, you can buy that.
So it sounds like long-term care has some unique options that could work for any situation, really, as long as you haven't let your house go on fire and try and buy fire insurance, right? That's a great way to put it.
That's true.
So looking at long-term care before you absolutely need it seems like the way to go. Yeah. And having a conversation with somebody like Bill is probably going to be great for your retirement plan and your estate plan. Thank you.